Gasoline price sitting at $3.95 a gallon, falling below that $4 mark last week. And despite crude now at $86 a barrel, the lowest level since January, we could have states seeing gas prices tick up as early as this week, according to my next guest. Let's bring in Patrick Haan. He's head of petroleum analysis at GasBuddy. He's sort of like the king of gas Twitter. Can I call you that, Patrick? That's how you keep us up to date.
I try to keep us up to date. Things have been moving so much in the last couple of days, and actually kind of a surprising development, a little bit earlier than expected. But last week, we saw the wholesale price of gasoline in some regions jump 45 cents a gallon. No surprise that yesterday started to see increases. Indiana and Ohio, and actually that 61-day streak, according to our data, ended yesterday. The national average jumped a whopping penny. But we are kind of now seeing the bottom out. Now, oil prices yesterday and today are back down, so it's not impossible that it was just a one-day blip. I do think that maybe we'll start to go a little bit lower with oil prices now paving the way for a further drop.
It's been remarkable to me how fast and furiously we've fallen. I mean, it took us a couple weeks to talk about why gas prices hadn't dropped, and then it feels like they've been on a plunge ever since. Is the SPR release part of this? Or my understanding was there's still this refining bottleneck, and we should have had, I'm just curious where we stand on a couple of those challenges.
Well, the SPR is maybe not actively pushing prices down. I think it's kind of accounting tricks to move it from one pool to another, right? From the SPR to commercial inventories. We're also exporting a good amount of those barrels as well, which helps alleviate global supply tightness. So I don't know that it's doing a lot to actively drive prices down, maybe a little something. I think a bigger change here that we've seen over the last 9 weeks with prices declining is renewed concerns over the U.S. economy. The Federal Reserve raising interest rates now twice at a level of 75 basis points. A lot of consensus was that would slow the economy down. Well, not according to the jobs market. I think that's where a lot of the drop in oil has come. Not only that, but Russia continues to sell oil to China and India, and that was maybe unexpected in the early innings of those sanctions. So that oil is flowing. Really, supply has been modest. I mean, it is quite a bit lower, but gasoline supplies also. Prior to the blip, gasoline supplies had been increasing in June and July. Of course, last week, they declined by 5 million barrels, which is, I think, why we saw the big jump in wholesale gas prices in some areas of the country.
Yeah, where are we in terms of inventories for both gasoline and diesel? Because we had heard earlier this summer that parts of the country, like in the Northeast, on the diesel front, were close to running out.
Yeah, certainly the diesel tightness is persistent, and that's a problem that will probably continue to last into the latter half of this year, especially as some of those northeastern heating oil tanks start to get filled up. Diesel demand, that's more the tide of the economy. So I don't expect much improvement in diesel. That's just because we've also lost a lot of global refining capacity, especially in Europe. Gasoline inventories, on the other hand, are looking fairly good. So gasoline may be the bright spot, but diesel, heating oil are still likely to be challenged as we move into the last quarter of the year.
Yeah, and I know obviously the kind of risk is there if we get hurricanes or just kind of general forces that push up the oil or the gasoline prices in the fall. We'll just have to wait and see. How has demand been? Maybe you could kind of compare with year-ago levels or something like that. But we had a previous analyst, I think, earlier this week who said demand hadn't actually snapped back as quickly as he would have thought because of the lower prices. And how would you describe demand for gasoline and what it tells us about the consumer?
Well, Kelly, a lot of analysts look at EIA implied demand metrics, which measure how gasoline disappears, not how it's being sold. And according to GasBuddy data, which does look at retail gasoline demand via transactions from our payments card, demand is below norms, maybe 5 to 8% below norms. From where we've been in the last 5 to 10 years. It's a little bit weaker than last year, but not as weak as the EIA implied demand metrics pointed out. Now, we did see those implied demand numbers jump up last week because suddenly there was a jump in wholesale prices, which forced stations to fill up. Overall, now, I think we are starting our seasonal decline for gasoline. That's not rare this time of year. Schools start going back into session. Yeah. Vacations are wrapping up. So that seasonal decline will continue. But I think with prices now lower, the gap between this year and last year is going to start to narrow.
Very, very interesting. Patrick, good to check in with you. Thanks so much.
Thanks, Kelly.
Patrick Haan with GasBuddy.